This is Market Day Report. How about we jump into the markets? We've been up and trading for 13 minutes. We start with the corn market, and December now a tick higher at 482.5, and we're trading in a 4-cent trade range as we start this trade. And so I guess you could say we're almost in the middle here of the early trade range. How about beans? Beans were lower yesterday, and right now the only contract in positive territory is that new crop November at 1156.5. It's a half penny higher. All other contracts are in the red. Staying here in the complex, soy meal contracts moving higher, building on what we saw in the overnight action, and bean oil trying to move higher as well, though that front month May is down 3 points at 71.65. Wheat market, we were lower across the board yesterday. We start the day higher, though, up 4 1/4, 611 1/4. And our focus here is really the July contracts for Chicago and Kansas City, as those are new crop, 8 cents higher in the hard red at 658. How about the cotton market? Cotton market took a breather yesterday, and that's after we had traded higher for 5 straight sessions. Back up above 80 cents, 80.07. We're down 9. Let's go to Dodge City. EmpowerAg Trading's Brady Huck. All right, Brady, how much is weather a factor in our markets today?
It's that time of year, Tony. Weather is up front and center. We're watching it all across the U.S. here today. We got the have and have-nots, though, out there with U.S. weather. We had an updated drought monitor here this morning, and winter wheat 70% in drought versus 68% last week, 43% in severe D2 to D4 drought. You also got cotton 98% in drought. That's a big number. 98% of cotton in some sort of drought, with 91% in severe drought. So the drought persists in the west, in the southeast, but it looks like we're going to get some heavy rains here across the heart of the Corn Belt that could put some brakes on planting progress next week here going forward. We'll see. At this point, though, Tony, I think moisture is a good thing, but I'm not sure it's, a lot of guys want to get the crop in the ground. So you get a little itchy that you want to get the planters rolling, the seeds in the ground, but we'll see how much planting progress we make next Monday. A lot of eyes will be on that.
Hey, Brady, for those who are not familiar with southwestern Kansas, you take that southwestern Kansas, southeastern Colorado, northeastern New Mexico, Oklahoma, Texas panhandles. That, for all practical purposes, is almost like a desert from time to time. If we get moisture right now across that region on this hard red winter wheat, does it make much of a difference? I mean, it's not like you can save the crop at this point, can you?
Unfortunately, Tony, I think you're right there. The ship has sailed for a lot of those acres out there in the heart of Dust Bowl country, extreme plains area. So rain right now, while it's going to be welcome to alleviate the dryness and soil moisture conditions and help that next crop, your milo, any cotton that gets planted in that region, the wheat, the ship has sailed for many of those acres. So,
okay. Now, let's take a break. We'll come back, and I know you've been watching the feeder side of this story on beef, so we'll pick that conversation up with Brady Huck. This is Market Day Report. We are rolling into our 7th day of lower trade in live cattle. Now, we've seen days where we start lower and then we'll finish higher, and vice versa. So will this be that day? Right now, live cattle futures are in the red. 245.65 on the April. It's $1.20 lower. And again, we had some cash trade at 246. Is it enough to really establish the trend for the rest of this week? We'll find out. June at 241.55. That's down $1.52. Now, that's the fats. How about the feeders? Feeders down $1.77 on the April, 365.02. So we're near the bottom of a $1.70 trade range in that April. but we'll try to converge that with an index next week. More on that in a moment. May contract for feeders, 355.67. We're down 275. Brady Huck's with EmpowerAg Trading. He's in Dodge City. And, you know, Brady, before we jump in, when we talk about the cattle industry, you're actually involved, right?
Right. Yeah. Day to day, every day. I manage the spring herd. My dad manages the fall herd. We raise Angus bulls and sell them every year in March. Had a great bull sale this year, and it's boots on the ground. Get a little manure on my boots after staring at a computer all day. I love the balance it brings to us. But let's talk about your cattle markets a little bit. There's a lot going on right now. We've seen a $40 trading range in feeder cattle. A nice $40 rally from March to April. That's $300 a head on an 800-pound steer. Futures have given half of that back since last Tuesday. So just a little over a week's time, we've slid $20+ in your feeder cattle futures. We don't like to see that, but it's just a reminder that these markets, they move and things change. And when they move, that presents opportunities to manage positions. So hopefully in that rally, we were able to manage the gap between our coverage and our put floors or that market. Pay attention to where the market's at with your put floor and your LRP. So hopefully we find some stability going forward. When you look at May futures at 350, mid 350s area, we're $20 off the contract highs. We were $30 lower than where we are today just 45 days ago. So pretty big trading range since the first of the year. But it's nothing to see an $80 to $100 trading range in your feeder cattle futures. So the final thing I want to talk about on your feeder cattle right now, Tony, is we are just a few days away, a week away from April feeder futures settling to that cash index that you hinted at. Feeder futures settle to the CME feeder cattle index, which is an average price of your cash feeder values sold across a 12-state area. Puts settle to futures. Futures settle to that index, and LRP also settles to that feeder cattle index. So ultimately, the index is the gospel on where this feeder cattle market is at. So it's not a perfect system, but it's a good tool. And I bring this up because each day we get an adjustment on the index, and we've got some really strong data that's coming off today that could swing that index today dramatically. So keep an eye on what the index does and how futures settle to that index, Tony.
Hey, Brady, before we go, I want to shift back to the weather story that we had earlier and corn. We didn't really have a chance to talk about corn on the feeder side here. Weather. Are we watching weather maybe in South America?
Right. Yeah. Cost of gain, when we look at feeding these cattle, cost of gain has been a huge advantage for feeding cattle right now, but that can change pretty quick as this corn market moves. We've had an abundant supply of corn. We've built a strong demand machine. Weather is important. We started the segment off with it. It's very important going forward. Keep an eye on U.S. weather, but keep an eye on South America weather. Brazil, pollinating corn down there. Had an early end to kind of the wet season. So what's the next 30 days hold for Brazil corn? Big implications on your global corn supply going forward over the next 30 days, Tony.
Yeah, great points, Brady. Great to see you. Go get some mud on your boots. There you go. Brady Huck, EmpowerAg Trading. He's in Dodge City.
All right, thank you.